Here are the crypto top headlines covered in this video. FOMO confirmed, BlackRock Bitcoin ETF clocks biggest trading day in 6 months. Next, RWA sector could reach $600 billion in next 5 years, says BCG. Also, Visa and Coinbase partner for instant crypto buys with debit cards. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, FOMO confirmed, BlackRock Bitcoin ETF clocks biggest trading day in 6 months. ETF analyst Eric Balchunas said the outsized trading volume across BlackRock's spot Bitcoin ETF is proof that investors are panic buying Bitcoin as the asset nears an all-time high. Daily trading volume for BlackRock's Bitcoin Exchange Traded Fund surged to $3.35 billion during the trading day of October 29th, its highest level in over 6 months. One ETF analyst said the spike in trading volume was driven by panic buying of Bitcoin, which is currently trading for $72,390, only a 2% move away from reaching an all-time high. Speculative frenzy among ETF buyers confirmed, suggest analyst. FOMO confirmed, Bloomberg ETF analyst Eric Balchunas said in an October 29th X post, citing data showing BlackRock daily inflows clocked $599.8 million. Across the 11 spot Bitcoin ETFs trading in the United States, total inflows for the day reached $827 million, according to CoinGlass data. Balchunas' claim came just hours after he mulled whether the massive trading volume across spot Bitcoin ETFs might be a surge in speculative buyers or just heightened activity from arbitrage traders. If this is a FOMO frenzy, we'll see it show up in the flows next few nights. If not, it means it's due to high-frequency arb trading or something like that, he wrote. IBIT not alone, although by far the most, as all the main BTC ETFs saw elevated volume the past 2 days, Balchunas added. Echoing a similar sentiment, Galaxy Digital's head of research, Alex Thorne, pointed out that across the board, October 29th was the third highest Bitcoin ETF trade volume day since April 1st, 2024. Throughout the October 29th trading day, spot Bitcoin ETFs in the U.S. saw a combined trading volume of $4.64 billion. IBIT had the highest volume, with the second highest volume from Grayscale Bitcoin Trust, or GBTC, which had inflows of $390.3 million for the day. A higher trading volume indicates strong liquidity and increased trading activity in the ETF, but does not reflect new capital flowing into the funds. BTC is on the brink of tapping its current all-time high. As for new capital entering IBIT, the ETF has witnessed an unbroken inflow streak over the last 12 days, with total inflows reaching about $3.2 billion since recording a net zero flow day on October 10th, according to Farside data. It comes as Bitcoin reached above $70,000 on October 29th for the first time since June 6th, a crucial price level that traders have been watching closely. Since the Bitcoin halving in April, Bitcoin had been consolidating in a range between 54,147 and 69,500. Crypto analyst Matthew Hyland pointed out that on October 29th, Bitcoin completed its second highest daily candle in history. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, RWA sector could reach $600 billion in next 5 years, says BCG. A swath of new research reports from major traditional financial institutions predicts outsized growth and adoption of real-world asset tokenization over the next few years. Real-world asset, or RWA, tokenization is set for explosive growth over the next 5 years, with assets under management potentially topping $600 billion by 2030, according to research papers from major traditional financial institutions. Global consulting firm Boston Consulting Group called RWA tokenization the third revolution in asset management in an October 29th paper. We see a pattern of growing investor demand in the tokenized funds space, said David Chan, managing director and partner at BCG. The paper, jointly produced with Aptos Labs and Invesco, estimated that tokenized fund assets under management could reach 1% of global mutual funds and exchange-traded funds assets under management in 7 years. This would imply an asset under management of more than $600 billion by 2030, the researchers said. Cointelegraph has reported that the sector may grow by as much as 50 times by 2030. Over the coming period, we expect that trend to continue, especially when regulated on-chain money such as regulated stablecoin, tokenized deposit, and central bank digital currency projects materialize, Chan said. The mass adoption of tokenized real-world assets may be led by bonds because their structural features make them ideal for blockchain issuance, according to a separate paper from State Street Global Advisors. The bond market is ripe for adoption, wrote State Street researchers in an October report on asset tokenization in capital markets. The complex nature of the instruments, repeated nature of issuance costs, and high competition among intermediaries support both a rapid pace of adoption and room for significant impact, said Elliot Hintov, head of macro policy research, and macro policy strategist Vladimir Gorshkov. Blockchain technology can play an important role in markets that prize velocity of trading, such as repos and swaps, they added. The report said that bonds, which are essentially debt instruments with a fixed maturity date, have 3 main characteristics that make them well suited for tokenization: recurring costs that can be reduced by tokenization, complexity, which can be automated by smart contracts, and collateral usage, which can be facilitated by on-chain transfers. The report also noted that private equity funds show high transformative potential, though public equities show lower adoption potential because current systems work well. Real estate and individual private equity tokenization face significant challenges, and commodities offer potential for direct ownership, but face regulatory constraints, the researchers said. The Financial Stability Board also released a research paper on asset tokenization this month. It said that adoption of RWA tokenization is low but growing, with most tokenization for government debt followed by equity stakes in debt funds, payment tokens, and commodities. Industry analytics platform RWA.xyz noted the recent increase in RWA research papers from institutions and asset managers in a post on X on October 29th. The platform shared that the total value of RWA non-chain is $13.3 billion, up 60% year to date. Our next top headline: Visa and Coinbase partner for instant crypto buys with debit cards. Coinbase and Visa offer customers with eligible Visa debit cards the ability to instantly deposit, withdraw, and buy crypto. Visa users with eligible debit cards will soon be able to instantly deposit and withdraw funds from their accounts with crypto exchange Coinbase, after the two firms announced a partnership. Coinbase already has millions of users with a debit card connected to their account, Visa said in an October 29th statement. Now, United States and European Union customers will get real-time delivery of account funds for those using an eligible Visa debit card. Coinbase customers with an eligible Visa debit card will also be able to purchase crypto on the platform and cash out funds from the exchange to a bank account in real time, depending on the bank and region. Yannisala Gonzalez Ora, head of Visa Direct in North America, said the partnership means those Coinbase users with an eligible Visa debit card know that they can take advantage of trading opportunities day and night. The move comes in a lull period for crypto offerings from traditional finance firms after FTX's massive 2022 blowup quashed confidence in the sector, tanked crypto markets, and led to a banking crisis in early 2023. Still, the EU's crypto regulatory framework, the Markets in Crypto Assets Regulation, or MiCA, began coming into effect earlier this year, offering more legal clarity for crypto asset service providers like Coinbase on how to operate locally. In the U.S., several major crypto players, including Coinbase, have spent millions influencing the presidential and congressional elections, with many industry pundits now predicting the next administration or Congress will pass pro-crypto regulations, regardless of which candidate clinches victory on November 5th. Visa has long worked with Coinbase by powering its crypto debit cards, which give users an outlet to spend their crypto through its network of vendors. The payments giant inked a similar deal with FV Bank on October 28th, backing the fintech firm's debit cards, which can be funded with crypto and cash. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.